If you've been watching this channel for a while, you'd know that we talk about August and September being volatile. Well, just like clockwork, we get a major credit agency downgrading US debt. And what this has done is it's sent volatility back up over the last 24 hours. We sold the NASDAQ past a range we need to discuss today. And of course, treasuries fell through a well-held support. So what does this mean for markets around the world, and especially stocks, commodities, and cryptos moving forward? Let's look together right now. Well, welcome back everybody to the Daily Show where we discuss markets, including the macro, leading indicators, and the hottest charts. If it's your first time here, welcome to the community. Smash that like button and of course subscribe. There's a lot to discuss. So rotation was clearly being felt in the markets, and in general, we saw some strong numbers come out for AMD and also some other semiconductors. The rest of the market, though, was mostly selling during the session. Now, could this be a start of a bigger thing? We know that August and September are some of the biggest months of the year in terms of volatility and also weakness in pre-election years. We also know that when calls get out of control, which they've been recently, it tends to lead into potential sell-offs in markets. Just like when calls are too low, it tends to lead into nice rallies. Timing will be everything though, and we've got the data and the stats to back this up today. Let's also discuss the idea of rolling 4-week averages and what people have been buying. Hedge funds have been in general buying since March. We've also seen a big flow in terms of institutionals flipping negative just recently, and retail or more private retail clients have just gone big time bull, which usually marks a bit of a hiccup in markets moving forward. Here is also the market capitalization trends, which we'll see has really moved into small caps over the last couple of weeks. So if you're a fan of hyper stocks, ARK and all of those types of things, and the markets keep rallying, I would say that could be the zone or the area where we see the biggest uptick. And we've already been following that now for quite a few weeks. So is it all bad? Well, not really. While August and September can have some negative connotations to them, and do remember that if August ends up being a positive month, every single September, 6 out of 6 were negative. We do know that generally speaking in pre-election years, when we've had the types of upticks that we've had already for the S&P 500 and the NASDAQ, we end up with a 17-to-1 positive scenario. They are very strong stats, over 94% positive. Do we know now, though, that coming into this big earnings season, we have something weird going on with the Qs? Well, the answer is simply yes. We've got tons of trades going through the top end, and we know that as of this recording, we've actually taken a new low on the NASDAQ thanks to the Fitch downgrade. So what's going on in these Qs? Well, huge trades tend to lead into a big breakout and a spike in volatility. We may have just seen the beginning of that over the last 24 hours, but you'll notice that often once you get a huge trade, an accumulation or a distribution starts to build. Well, that's what's happened. We've got a distribution on the Qs, and we'll look at that later on. Pre-election years, here are the data stats for the VIX. We see a spike around this period of time. Almost like clockwork, it was someone's choice to do a downgrade right when you expect it to happen. Remember, CPI is also coming out next week. We've got non-farm payrolls later on this week, which is the jobs numbers for the US. And all of a sudden, we have the American consumer in focus on Wednesday and Thursday with Shop, PayPal, Amazon, and of course, Apple. So what do we expect? Well, we expect volatility to potentially spike over the next coming months. Seasonality, if we take pre-election years, usually this is where we start to sell off. We're about at this point right now in the beginning of August. So if we are going to see a sell, it should theoretically come relatively quickly. And that's just using the data and the stats. It's not our opinion. It's just what's happened in the past. Let's move over to earnings. As you can see here, these are the expected moves from the options market. So they're saying there's some super volatility coming in these two stocks. We saw AMD not even live near the expectation of 8%, by the way. It was up about 3%, I think, after hours. Starbucks a little bit disappointing, although it had a good earnings overall, I think. And you can see that there is some big volatility coming in some mega market caps. So we've got 6% plus minus for Amazon. We've got 3 to 4% for Apple. Coin is sitting at 12% plus expected move on the day. That's going to be a monster. Here are some other big earners and some other big things coming out if you need to take a look. And we'll look at the beats and misses rating, which improved over the last 24 hours to 69%. So we're pretty much almost in line now. We're usually around 70% beats at this point in the year. and this point in the earnings season. But in general, I would say it's a traditionally okay earnings, and there's only really two major question marks in Apple and Amazon left, and then of course Nvidia later on. In terms of forward EPS ratings, this is what the Bank of America believes is going to happen. If we get a 5% earnings per share increase or surprise, we're going to around 5,288. And if we get a negative decline, these are some of the scenarios. Either way, we're trailing at a 21x forward PE now, that or a normal PE and a 20x forward PE. That's getting expensive. We know the average is sitting about 16.8. So really, for an investor, this market is maybe not super cheap in the main big asset classes. It's a lot cheaper when you start to look at some of the hyper stocks, though, and where they've been in the past. Let's move over now to going through Tesla, Nvidia, and the others in terms of unusual options flow. Did we see anything super unusual? I would say no, it wasn't super unusual, though Caterpillar did have, of course, a nice move through its earnings. And we've basically just seen a lot of these AI-style stocks and semiconductors continuing to play this week. 56% calls is down from its usual 60%, 44% puts, and lower volume than normal, only 34 versus 39. So people are definitely awaiting the big Amazon and Apple news. In terms of rotation over the last 5 days, we've seen some significant rotation. Banks, semiconductors, energy, those types of things were doing the best over that period. And then what was doing poorly was, of course, gold. Gold was all the way down at 3.76. And GDX has actually come back to a level where I can see buyers potentially presenting, especially after the Fitch downgrade. That may be a good catalyst to show that gold has come back to a level that we were already looking for on the charts. And also gold spot sold off to some of the levels that we'll look at later on, which were quite good. On the day, it was industrials, technology, and financials that held, and defensives were not being bought through the session. We had XLV, XLP, and XLU not really finding a lot of buyers. So again, the next 24 hours could be important here. Without further ado, let's jump into the charts. Some quick alerts that we need to always make sure we set. 5.1%. We need to know if basically we have an acceleration in the US 2-year yield. Remember, CPI is coming 10th of August. I do expect, as do the banks, year on year to increase. And a huge component behind that is oil, which we'll show on the charts later. JP10Y, we're wanting to set alerts at 0.7 and 0.8 as critical levels here. If it starts to pressure the Bank of Japan, that's going to be a big catalyst in the markets as well. This is a huge deal. We will go into it in more detail, so make sure to subscribe for our special on that one. The volatility in the VIX itself, the VIX was up to 14. I expect this to kind of increase over the next 24 hours. And if we go to the volatility of the volatility, which is the VVIX, you can see it's slightly uptick, but no significant underlying vol moves as of yet. Bitcoin, big interesting change. Now, with the Fitch downgrade, we saw Bitcoin not quite make it to 28K and then reject. Now, on the smaller timeframes, this has actually just made a small timeframe change of trend. So while I thought it would probably go towards 28, it's actually bounced and broken through here. Could this be the beginning of something big for Bitcoin? If it gets through 30,400, I could see it making a new high and really pushing for the levels. So at this stage, pullbacks to be met by buy demand, I'd say around 29,000. Just above 29.2 could be an area where we find buyers. So somewhere in that area here, what's at 29.256? This area here could be finding buyers. And this is a significant switch what we've seen in gold. And we've also seen it in the cryptos over the last 24 hours. What about treasuries and bonds though? Well, treasuries fell through. And this is symptomatic of exactly what happened in 2011. We saw a downgrade of the S&P. We saw a downgrade of everything across the board. And basically what happened was we saw an initial shock in treasuries followed by actually quite a nice rally. I don't think the American government's going bust. I don't think anyone really does, but it's putting pressure on the treasuries and they could be moving down now to our next level of 94 or even the super level of 90. And this is a significant level. Watch for the weekly close here. If you're wanting to trade it, I don't know if it's worthwhile going for the short on treasuries. I am obviously a bull on this medium to long term, which means 6, 12, 24 months away plus. But I do need to see the next prices. And we've kind of talked about this for a while. This was a well-held level. This is a significant switch. And unless the weekly makes a big change, that's going to be a big zone. What about junk bonds? Junk bonds fell pretty significantly. They actually instigated an island reversal. So we have a gap, we have a range, then we have a gap down. Is this the beginning of something big? Well, junk bonds certainly are not something to be trifled with. If they keep selling, the market sells. That's usually a bit of a tick of approval, potentially for mean reversion to the 20 moving average or something like that. Magma, no change there. Very little trade over the last 24 hours, basically sitting at the level. And then we move over to XLY versus XLP. So, of course, this is consumer discretionary versus staples. What's going on here? We don't know yet. Probably Amazon and Apple will move this chart. If we make a new high, good times keep rolling, and I think the markets go on to really press the all-time highs. If we start selling here, we need to pay attention to defensives for the next couple of weeks. Copper, what's going on with copper? Well, we got a pretty significant change here all of a sudden after going that daily close above. Usually, if that weekly ends up closing bullish, we're going towards 4.12. But copper putting in the rejection here, showing that maybe while the inflation trades on, there's a bit of distribution. And of course, it looks like we're probably going to be selling off here for a little while. US oil keeps spiking up. Inflation is somewhere in the background. Take a look at that. Wow. 82.22 back into the supply range. This is going to have to affect CPI, surely, being such a huge component is energy. And that's moved as a percentage up monstrously. If we're looking for shorts, this is probably the area you would be looking for energy stock, but 23.19%. We go down to the daily here, and you will see that it's literally in that resistance area. Next stop, if it breaks out, somewhere in the 88.50s. But yeah, big trade there. I haven't really been paying too much attention to energy because while I know it could be upticking, it hasn't given us an easy replicatable trade. Here's one where I guess things didn't really work out, and we had a suspicion it might be coming. Of course, this was where we wanted to see dollar short. It kind of floundered over the last 24 hours, and we had that mixed signal from gold, which was obviously the short as well. And one worked and one didn't. Dollar went bullish. Dollar broke out to the next level of supply. Interesting level for it to hit. As we can see over here on the left-hand side, the big zone before. Could it be the end of the dollar? Absolutely, it could be. Watch the space. 75 fib retracement. A lot of things here. The gold trade, though, was really, really nice. So you can see here, the gold trade went on to the lows. For some people, that's going to be TP set. Nice. For some other people, they're going to be looking for gold to come down a little bit more into the 1930 space and find buyers around here. I'll be watching it very, very closely. And I think also GDX is becoming super interesting along with Barrick at these pullback prices. So if we have a look at GDX, it's pulled back, it's filled the gap, and we're at that level where you would expect maybe some people to start to like the shiny metal again. Inverse head and shoulders, first time frame changes of trend, a lot of things that are starting to look a little bit more bullish here, even though it's pulling back at this stage. Good level for gold. I don't mind on the charts. This one's blinding us, but basically it's central bank liquidity. While central banks haven't gotten rid of that emergency, you can see here it's still very red, and that means that there's a huge discrepancy between generalized central bank liquidity and the markets. The markets are still hyperactive. Here's the chart I'll be setting alerts for this coming Thursday. That's AAPL, and we're looking for it to close below with a red candle underneath the 20 MA. And if it does that, nice. That'll be really, really sweet. So we're looking for that in terms of turns. We also don't want it to make a new high if that occurs, because of course that could mean that we're already starting to weaken. And yeah, it's been a great run for Apple. We don't know if it's going to continue. At this stage, you would have to say it is continuing. Amazon started to weaken a little bit. This is the key zone for swing traders, 125.86. Set alerts for that as well. And you can see here that we've pulled back to about a 75 fib, and then we've started to short back off. Will it continue? Earnings is really the only answer here. I don't know how it's going to play out. Probably none of us do. We can guess that things are positive based on the news, but yeah, I don't know. The American consumer forward guidance has got to be weakening. We're seeing it in Rolex watches. We're seeing it in collectibles. Comics have come off. Watches have come off hugely. Every collectible market I've been looking at has shown signs of weakness. So I'm guessing that's in the forward guidance for these big ones, but who knows? You know, it's been a weird market recently. Tesla continues to coil within the tight range, so no real changes here for what we're thinking in Tesla. No breakout, set alerts from the top and the bottom. Look for the breakout, look for the gap, or for, of course, 240 after the breakout occurs. CQQQ broke out recently. The Chinese market likes the stimulation aspects, but of course it's not coming fast enough. I would expect it to probably flow back down and then maybe find buyers back around this price of somewhere around 41.23 or 41.20 from the price action standpoint. Oz 200 flounders above the breakout, so a key level here for the Australian market. And you can see it's kind of up, down, and all around. Interesting level. Certainly at this stage, you'd have to go with it's bullish, but it's going to be tough there. The German market made what looks like a UTAD, but we don't know until we're underneath 16K. So remember, we've been discussing, is this some type of huge distribution? We've got the buyer's climax, we've got the UT, we've got a potential UTAD question mark. We won't know that until here. I'm watching it very closely. That certainly looks like a rejection 3 candle move, but again, it's been a tough market. I would expect rallies at this stage to potentially be met by sells and something that we are looking at, but 16,000 being the critical level for the German market. Let's now move into the other markets. US 2000 hit 2K, sold off again. No change yet. We're looking for markets to go underneath the last low, which is 1950. Again, that will be a significant swing-based turn. We now have a high, we have a low, we have a higher high, and we're looking for that lower low to come through to change us. And at this point, it's very interesting. And I would say we probably get this by CPI. By 10th of August, I have to believe we've got new direction on this market, whether that be breaking to a new all-time high or whether that be basically selling off for a little bit here. US 500, what goes on there? Well, we did see some turn at above these points, 4,600 still being a bit much for it. The Fitch downgrade plus earnings sold the market off. We know where the strength is, 45.40, big strength in this block here, which we're looking at. So these are the 3 main blocks, and you want to be paying attention to potentially buy the dip kind of areas in here. But it's sold. I expect it to rally, maybe fill the gap, possibly sellers to recommence. Interesting news. Markets are now really rallying back on that, but yeah, certainly showing some signs of weakness. The NASDAQ is similar, but this one changed a lot better than the others. So we expect a lot of sells in here. Remember, we have known selling, or what we can assume is known selling now, that has gone on through all of this. Now, unless this is a false break to the downside and it breaks to a new high, which would be, we're going for a short squeeze at that point, you would think. At this stage, we have to assume that is probably selling positions. And there are a lot of them that have gone through this area on the Qs, which we've already been tracking and talking to you guys about this week. We took a low, we rallied up. For anyone that's done our day trading masterclass, you would have known that was an excellent entry. Congrats if you got that. Break even that trade already. It's all safe and you're already up plenty of ratio in terms of about 2-to-1 at the lows. So that would have been pretty sweet, though there could be more to come. And it's just a good replication style strategy and a nice replicatable position. Let's move over to Bitcoin. Again, just quickly here, this looks like it's rallying. That looks like it could be a trap low. Obviously, we thought 28K could happen, but we remain adaptive here. And really what I was looking for is buys on Bitcoin, whether it's here, whether it's lower. At this stage, I would have to think pullback to that level could be met by bull demand. As always, guys, make sure you're ahead of the news. This is the big stuff coming out for the next couple of days. We have Wednesday, we've got ADP non-farm employment change. We saw CPI is going to come out for CHF. And then, of course, we've got Bank of England monetary policy reports and a whole bunch of statements about whether they're going to do this rate hike, which is expected. Then we go to ISM Services PMI, 10 a.m. Thursday, New York time. And then the big one is going to be non-farm payrolls, 8:30 a.m. Friday, August 4th. There's so much information coming out here. We've got earnings. So stick around. Then we've got CPI. Well, then we've got non-farms. Then we've got CPI on Thursday, August 10th. This number is going to be critical. What are they expecting? If they expect it to be flat year on year, I would have to go against that based on what's going on with this oil price. But anyway, what do you think in the comments down below? Let me know. Thank you so much for subscribing. Smash that like button. We'll see you in the next one. I'm super excited for this week and especially earnings reports. So let's take a look at Amazon, Apple, and of course the next 24 hours, Shop and PayPal. Bye for now.